Have you ever wondered why some people make thousands of dollars from the stock market while others lose money every month? Today, I'm going to show you how beginners can start investing in stocks without feeling lost or confused. You don't need to be a financial expert to grow your money. By the end of this video, you'll understand the step-by-step process of investing in the stock market. Are you ready to turn your curiosity into action? Hi, I'm your guide for today, and we're diving into the world of stocks in the simplest way possible. Many beginners feel overwhelmed with all the numbers and charts, but don't worry, I'll break it down for you. We'll start with the basics and slowly move to strategies that actually work. By the end, you'll feel confident enough to make your first investment. Let's make finance fun and easy together. The first thing to understand is what a stock actually is. A stock is basically a small piece of a company that you can own. When the company grows, the value of your stock usually grows too. This is why investing in the right companies can help your money grow over time. Think of it like planting a tree that gives you fruits every year. Next, you need to know the two main ways to earn from stocks. The first is capital gains, which means your stock's value increases and you sell it for more than you bought it. The second is dividends, which are small payments companies give to their shareholders. Both methods can slowly build your wealth if you're patient. The key is to start small and keep learning as you go. Before buying any stock, you should learn about research and analysis. Don't worry, you don't need complicated formulas or graphs. Start by reading the company's story, its products, and how it makes money. Also, look at customer reviews and news about the company to understand its reputation. This simple homework can save you a lot of mistakes later. One common mistake beginners make is following the crowd. Just because everyone is buying a stock doesn't mean it's a good investment. Always focus on your own research and financial goals. Remember, patience beats panic in the stock market. Small, consistent steps are better than big, risky jumps. Another tip is to diversify your investments. Don't put all your money into one company or sector. Spread it across different industries like tech, health, and consumer goods. This way, if one stock drops, others can balance your portfolio. Diversification is like not putting all your eggs in one basket. A big question many beginners ask is, how much money do I need to start? The good news is, you don't need thousands of dollars to begin. Even $50 or $100 can get you started with many online brokers. The key is consistency and learning as you invest. Over time, small amounts can grow into significant wealth. Another tip is to avoid emotional decisions. The stock market goes up and down every day. If you panic and sell when prices drop, you might lose potential gains. Take a deep breath and focus on your long-term goals. Ask yourself, will this investment help me in 5 years? Many beginners also wonder which stocks to buy first. A good starting point is well-known companies with stable growth. Think of brands you use every day or trust a lot. These companies usually have a track record of making profits consistently. Starting with familiar names can make investing less intimidating. Now let's talk about online brokers. These platforms allow you to buy and sell stocks easily from your phone or computer. Some popular beginner-friendly brokers have no minimum deposit and low fees. You can even track your portfolio and get learning resources through them. Choosing the right broker makes your investment journey smooth and simple. A simple habit to start is automated investing. Many apps allow you to invest a fixed amount every week or month automatically. This helps you stay consistent without worrying about timing the market. Over months and years, this strategy can grow your money steadily. Even beginners can see real progress with small but regular investments. Now let's talk about risk. Many beginners fear losing money, and that's natural. The stock market has ups and downs, but with research and patience, risks can be managed. Think of risk like riding a bicycle. You might wobble at first, but practice makes it easier. Understanding risk helps you make smarter decisions rather than avoid investing altogether. A question you might have is, when is the best time to invest? Honestly, no one can predict the exact time. That's why beginners should focus on consistent investing instead of timing the market. Dollar cost averaging is a strategy where you invest fixed amounts regularly, reducing risk. Over time, this strategy can outperform trying to guess highs and lows. Let's discuss long-term versus short-term investing. Short-term trading can be exciting but risky for beginners. Long-term investing focuses on holding stocks for years to grow wealth steadily. Patience is the real secret to making money in the stock market. Ask yourself, am I ready to hold this for the next 5 to 10 years? A helpful tool for beginners is a virtual stock simulator. It lets you practice buying and selling stocks without using real money. This is a great way to learn strategies and test your decisions. Mistakes in a simulator don't cost you anything, but the lessons are real. Once you're confident, you can start investing actual money gradually. Another tip is to read financial news regularly. Understanding the market trends helps you make better decisions. Don't get overwhelmed by every headline. Focus on major events affecting companies you invest in. Even a few minutes daily can keep you informed. Knowledge is power, and small, consistent efforts go a long way. Let's talk about tracking your investments. Many beginners forget to check their portfolio regularly, which can be risky. A simple habit is to review your stocks once a week or month. Note which ones are performing well and which need attention. This keeps you in control and reduces surprises. Now, let's see how small investments can grow. Imagine you invest $100 every month for 5 years with an average 8% annual return. By the end, you could have around $7,000. This shows how consistency beats large one-time investments. The power of compounding works quietly, growing your money over time. Side hustles can also help you invest more. Even earning an extra $200 a month from freelancing or part-time work can boost your portfolio. You can put this money into stocks or ETFs to grow faster. Small extra income adds up over time. What side hustle could you start today to invest in your future? Let's do a simple calculation. If you invest $100 every month for 12 months at 5% growth, you will have around $1,230 at the end. This includes both your contributions and the growth of your money. Imagine doubling this strategy with $200 per month. In just 1 year, you could reach $2,160. Now let's see a 5-year example. Investing $100 monthly with 8% growth could make around $7,000 in total. Doubling the monthly investment to $200 could grow to $14,000. Even beginners can see how powerful small investments are over time. Compounding really is like a snowball that keeps getting bigger. Let's look at a practical example of dividend income. Imagine you own 50 shares of a company paying $2 per share annually. That would give you $100 every year just from dividends. Reinvesting these dividends can further grow your wealth over time. Even small dividend-paying stocks can make a difference in the long run. Are you ready to explore dividend investing? A friend of mine started with just $50 a month in a tech ETF. He didn't know much at first, but he kept investing consistently. 5 years later, he was amazed at the growth of his portfolio. Stories like these prove that anyone can start small and succeed. Your journey can start today, no matter the amount. One last tip: keep learning continuously. Read blogs, watch videos, and follow financial news. Even 10-15 minutes a day can give you a huge advantage. Which topic would you like to learn more about next? Budgeting, side hustles, or investing? Comment below and start your learning journey today. To wrap up, the stock market isn't as scary as it seems. Start small, stay consistent, and focus on learning. Diversify your investments, and don't let emotions control your decisions. Small steps over time create real wealth. Remember, your financial future starts with the choices you make today. If you found this guide helpful, don't forget to like and subscribe. Sharing this video can help a friend start their investing journey too. Hit the notification bell so you don't miss future tips. Investing is a journey, and we're here to guide you every step of the way. Stay consistent and keep learning.